Dustin Hobbs of the California MBA. Welcome to Connect, our weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. We've got a great guest today. I'm really excited to get into the conversation with her and chat about, we're going to talk today about some litigation issues, some legal and regulatory compliance issues, and sort of switch gears a little bit from the last few weeks. But before we do that, I want to thank our sponsors at Accelerate. So Accelerate helps lenders close more loans through better borrower engagement as the mortgage industry's most innovative marketing and sales engagement platform. Accelerate CRM helps lenders manage workflow, contact strategies, lead management, referral, and realtor partners and reporting. Accelerate's engagement platform automates multi-channel marketing through social media, email, direct mail, text messages, ringless voicemail, and phone calls. It's all pre-built with the strategies and content to enable a better borrower engagement. Accelerate integrates with the software that's already powering your business today and in the future. So in addition, the platform is SOC 2 and SSAE 18 certified to satisfy the most closely regulated businesses, including banks that have mortgage subsidiaries. So for more information or to see a demo, visit accelerate.com or contact the company at the phone number in the description below. So normally this time I would welcome in Susan Milazzo, our CEO, to give us a quick update, but actually I'm going to give that update today. So we've got good news. As of late last week on Thursday, Assembly Bill 2501, which would have enacted sweeping new forbearance measures that went well beyond the Federal CARES Act mandates for residential multifamily mortgages. It's been defeated on the floor of the Assembly on Thursday of last week. So the bill failed passage earlier in the week, and then Thursday's session was the last scheduled session before the deadline, the legislative deadline that it needed to pass came. So the bill is now considered dead, which is great news. I want to make a big thank you to everyone who responded to the Mortgage Action Alliance request for engagement, our request for engagement. Everyone did a great job getting out and reaching out to their legislators and contacting them by phone and email. It made a big difference, and this is a huge, huge victory for the mortgage industry. So make sure, and if you haven't already seen the alert from us, you can shoot me an email and I'll send you some more details about it, but this is a big win for us. And if you want some more information about other bills that we're following, make sure and go to our website, cmba.com, and click on that advocacy tab, and you can follow the day-to-day tracking of all the bills that we're following throughout the legislative session, because we've actually got a few more months to go. So you never know what can happen in the last few months of session. So make sure and check that out. All right, with that out of the way, let's welcome our guest today. Monika McCarthy is Managing Director, General Counsel at CrossCheck Compliance. I've known Monika for a number of years. Monika has been involved in the association for a while now, and she's done a great job at both chairing both our legal issues and regulatory compliance conference for a few years, as well as our mortgage quality and compliance committee. So if you've been on any of those MQAC calls or webinars, Monika's been sort of at the heart and soul of putting those together for a few years. So thank you, Monika, and thanks for being here.
Thank you so much, Dustin. I appreciate the opportunity and to be part of this podcast with the CMBA.
Great. All right. Well, let's dive right into the Q&A here. So, tell us your journey through the mortgage industry. What what were the steps that you took? What led you to where you're at now with CrossCheck?
Sure. Well, my journey started a while back when I was an attorney and I was in private practice at law firms downtown LA, and found myself doing work for financial institutions. So I did that for quite a while. I was a litigator and labor lawyer, and then I went in-house. And I went in-house to a mortgage company, and then over the years, I became general counsel and worked in that capacity for various companies, both publicly held, private, also did a stint consulting, and then I was also general counsel of a fintech, sort of a startup, again, in the real estate space. So that's sort of my background, heavy mortgage. And it was actually in 2016 where, the work that I'd been doing had been, working with lenders of different sizes and advising them on, litigation, business matters, crisis, critical situations, and all of that, that I found myself in transition and trying to figure out what did I want my next opportunity to be. And it happened to be at a dinner at the CMBA's Legal Issues and Regulatory Compliance Conference. And I was at a table with a whole lot of the usual cohorts, and people were asking me what I was going to do. And so the founders of CrossCheck, Jim Jorgensen and Mike Forrester, said, well, you're going to come work for us. So what they did was we fashioned a job just for me. So I have a dual role at CrossCheck. I am their general counsel, and so I provide them advice and counsel on the business and all of the legal and ethics and other issues that we deal with. But then the other part of my role is I also do business development as a managing director. And so I really have enjoyed that since 2017, and it enables me to both keep my finger on the pulse of the legal issues as we work with banks, mortgage, fintech, credit unions, hedge funds, other companies in the industry, but then also helps me leverage that vast network of folks that I've come to know over my career in the industry and enabled me to participate in CMBA activities and other associations. And that really helps me, with the networking, but also I love connecting people. And so that's part of my job, and I enjoy that a lot too.
Well, that's interesting. I'm so glad. I had no idea that you had met the CrossCheck guys at the conference, at our legal issues conference. That's so exciting.
Yeah.
So tell me, I'm curious. This is what's on everyone's mind right now, the COVID-19 pandemic. So each week we're asking. I'm just curious. How each firm and each company and lender is dealing with the issue. So how are you guys? How is the firm handling the fallout? What's been sort of the way that you guys have changed business and operations, and how has that affected you?
Sure. Well, initially, back in March time, as with everyone else, in the industry and in business, there was a significant amount of uncertainty. And, candidly, we did not know how everything would affect our business and our clients. And we do have a diversity of clients, which is good. But, we fortunately were accustomed to working remotely. Most of our team was equipped and did most of their work on some level remotely. So it wasn't a huge transition for us. We had a few people at headquarters that were accustomed to coming to the office, but outside of adapting those, we were fine. And so we were able to not really skip a beat and continue to work. But one of the next steps that we really took was to reach out to our clients and to determine what was happening for each of them. How could we continue to work with them? What issues were they having? What we saw was some folks that were not accustomed to a remote workforce were having a tough time and were scrambling, from getting laptops, security issues, and so they had some downtime and some things weren't happening. Others, adapted a little bit more quickly. And again, diversity of clients, and so they were handling things differently. And so I think by now, it's a couple months later, we were able to continue to work and are continuing to work. Some of our clients were very focused on issues surrounding the pandemic. So, some projects, got pushed back. Others wanted to move forward more quickly. And so we've just continued to do things. And today, the new normal, here we are on a podcast, and everyone's getting accustomed to Zoom type calls and meetings, having a screen where you've got 9 people. It's like we're playing Hollywood Squares, and you get to work with your clients and coworkers that way. But so I think we're doing well in the new normal. I think we followed our business plan. We had a pandemic provision, so I was very proud of that.
Oh, wow.
I think like a lot of folks, we've worked through it, but we've really come out of it better than I think we had anticipated.
Well, I'm curious, you mentioned that you guys had a pandemic plan. Roughly what would you say, what percentage of the industry had, of lenders and other vendors in the industry have anything like that?
Well, honestly, I think in the business continuity plan that is part of almost everyone's, sort of CMS and their base policies, I think there is likely a provision in most of them that would cover something like that. And I think you saw a lot of that come into play after 9/11. And I think I started seeing, at least, living through that as a general counsel, a lot of folks started thinking more about what their plans were for business continuity if a disruption like that occurred. And so I think that's why people were probably more likely than not to have something that could cover the situation.
Okay, so you think probably more people had something in place now than pre 9/11?
I do.
Yeah. Okay. Well, I'm curious, when you're talking to your clients and prospects and stuff, what's your sense on where they think we're at recovery-wise? Obviously, rates are crazy low right now, and it's really helping keep a lot of lenders busy. But maybe what's your biggest concern about the recovery going forward?
Well, I think as far as concerns go and the shape of it, I think that I was very impressed that with our financial services clients, especially mortgage, they were blocking and tackling from day one. So I think, already as far as recovery goes, they didn't skip a beat. And I think that I was very impressed, especially with the mortgage industry and all of the lenders, because they were challenged right off the bat. You couldn't do an appraisal. How were you going to meet your client to get the loan documents signed? What was title and escrow doing? What was happening with the online notarization and dealing with that and the legislation, and a myriad of issues down to how they were going to record documents. And then all along the way, guidelines were changing, investors were taking actions, GSEs were doing things. So I think that, in order to recover, you had to get past all of these issues and steps. And I think that this mortgage industry has, figured most of that out. And so I think, that's working well. I think for those of us that are active in the private securitization space and do some of that due diligence, I think we were a bit, maybe not surprised, but, seeing the loss of liquidity in the non-QM market and how that almost vanished overnight, that was disconcerting to a lot of folks, to the players in that space. But what I will say is I think we're seeing some signs of a comeback. I know that I have seen some auto securitizations and there's a little bit more buzz of that coming back, but I think it all really surrounds how the economy is coming back and the recovery is going to impact those non-QM borrowers, that I think will give more comfort to let that piece of the business go forward. So,
do you think that's more of a GDP issue or an unemployment rate? What would you say is sort of the metric if you're worried about the non-QM market?
I think it's going to be more on the employment side of, a lot of people that are business owners, independent business owners, and people that own their own businesses that tend to be in that non-QM space. When we see that they have a little bit more stability in running their businesses, I think that there'll be a little bit more comfort in that area. So, and I think everybody does look at the economy as a whole as well.
Gotcha, that makes sense. So let's switch gears a little bit. I'm curious what your thoughts are on how lenders and servicers are adapting to the changes, specifically around forbearance requirements with the CARES Act. Obviously, we just had late last week the bill out here in California, AB 2501, failed passage, which would have changed the scenery around here dramatically if that had passed. But what's your sense on how they're adapting to the new forbearance requirements?
Yeah, well, I will say kudos to CMBA and MBA for a lot of their actions, getting the rest of us to take action with the Mortgage Alliance to really, watch the legislation, to push back, because that's been very, stressful and put a lot of concern on all the servicers with forbearance. So I think these are definitely challenging times for servicers. And I think those challenges are operational for the most part. And, I will say that most of the servicers, if they think back to the mortgage crisis of 07-08, they've already put in processes and implemented plans that had to adapt to those new rules and guidelines. So I think that they've had to do that again. With these new guidelines and rules, continue to have that consumer focus that the regulators and legislators are wanting them to have. And so I think that, compliance cannot take a back seat during this time, because, they've got to do training on all of these new issues. I will say that in looking at all of the things that the servicers are required to do, it honestly makes my brain hurt to think about how they're going to roll that out with employees being remote, having to deal with consumers in these special ways and dealing with all of the new guidelines and forbearances in different states and all of that. So very challenging. But I think it's going to require them to do what they do, which is put your processes in place, update your systems, train your people, monitor, and audit. CrossCheck does a lot of auditing of servicers and sub-servicers. And so I think we're going to continue to see that because the regulators tend to have a sense of looking back at what people have done and how they've done it. And so everything from servicing transfers, which I think we're going to see an uptick in, to how that was handled, to all of these other issues that the servicers, lenders, everyone's really going to have to be focused on that and continue to just have good compliance systems and training and monitoring in order to adapt to that.
So do you think, I'm curious, you mentioned the 07-08 crisis and sort of the experience coming out of that. Do you see a lot of that experience still at a lot of the servicers that you guys work with? I mean, I have to imagine that experience has got to, even just the actual experience of a person going through that, not just having the procedures in place, but having that actual lived experience. Do you see a lot of those people still at the servicers and still being able to provide that lived experience?
Well, I would say yes. I mean, I think that servicers have been under scrutiny by their regulators and in particular the CFPB of late. And, we work with a number of servicers and the CFPB has been very active. And so all of those things that were put in place in 07-08, they have had to continue to ensure that they're doing things right. And it continues to be a challenge, because you're trying to deal with servicing the loan for your investor, but still being helpful to the consumer and being transparent. So I think the issues that the regulators are touching on that on some level still continue to be challenging is the data integrity and just really having good data and good documentation and transparency with the consumers of what's going on. Those continue to be challenges for what the servicers have to deal with. And so I think that, a lot of folks in the servicing space, they've been around a while. And so I do think there are people that can give good guidance, but with all the new technologies and people trying to do things better and faster and better consumer facing, as you adapt to those changes, you have to make sure all of your disclosures and things are there as well.
That makes sense, yeah. So aside from the forbearance issues, what would you say is the most pressing regulatory compliance issue right now that lenders face?
Well, there's a couple of them, I think. What goes hand in hand with the forbearance issues is fair servicing. So as I said, we've seen the regulators be tough on the servicers, and I think those are fair servicing issues. So I would say that's one. Another one that is of particular interest to me is that lately we've really been looking and hearing a lot about fair lending issues. And that's coming out of not the pandemic so much, but as a result of a lot of the injustices and social unrest that we've had. And what we're seeing is, banks who have to comply with their CRA requirements, but also non-depositories are saying, what can we do better? How can we lend, or what can we do more for those underserved communities? And so that's really opened up quite a bit of dialogue for us, both with clients, both banks and mortgage lenders and the like. And also, I've been talking to a lot of our law firm partners, a lot of the lawyers that specialize in this area, and just, bouncing ideas around again, what can people do? And it's very similar to, back in the day when we were dealing with predatory lending issues. And some of those strategies are still there. At CrossCheck, we do a lot of the fair lending work, helping our clients on all different levels, whether it's in litigation or just getting their alhamdulillah pulled together. And I think what we're recommending is that if this is an area that lenders want to look at, get your arms around what your HMDA data is telling you. Where are you lending? Where aren't you lending? especially those lenders that have different channels where you don't have boots on the ground in all these communities. What do you look like? What do you look like against your peers? And those may be some things that folks want to look at now. While I'm not saying that I suddenly see the CFPB turning on its, fair lending scrutiny, although one never knows what might happen next year. We just think that that's an area people are talking about because a lot of what's going on now. So
Yeah.
those are the issues we're seeing.
Well, hopefully there's some constructive dialogue that can come out of that. So what about you mentioned litigation. What are some of the key legal and litigation concerns that you've got right now as far as the next maybe 12 months?
Well, I think that everyone is fearing that there will be litigation out of all of the forbearance issues, and as folks come out of that. And so a lot of that timing, will depend on when the forbearance periods end, how well consumers are going back to work and can transition back to paying and the like. And so we'll have to monitor that. But that's one area that people are concerned about. And again, I would say that we should all look back to the lessons learned in 07 and 08, some of the issues that came up there, and revisiting some of those claims, causes of action, and things of late. The other areas where I think we might see some litigation, where we strongly are recommending our clients really train their folks, are on the new credit reporting issues and those new requirements, so that they're following those and it doesn't give rise to any potential claims. But that's definitely an area that we could see some activity. And I would also say that probably not so much for all of the mortgage lenders, but for those banks that do the PPP lending, there are already class actions out with some allegations around the fairness of who got those loans and who did not. So I think there's some of that there. But I would just recommend folks keep up their consumer focus. It's what the regulators are going to want to see, and just to well document what they're doing now so that they can help mitigate those potential litigation claims down the road.
Gotcha. No, I think that's good advice. So what would you say then, as we start to wrap up here? What's one thing, if I'm a lender, especially like a C-level executive, what's one thing that you think I should know that maybe I don't know?
Well, interesting. I wish I had a crystal ball, but I do not. And I think that all of the law firms and associations that we work with and know have done a great job with all the COVID updates. So I think we have gotten every update, every projection from every source so far. And what I would say is, if this is your first crisis for those in the industry, then there's a lot of issues that you need to be aware of. But I would say that, for most of us, we've been around for a while. We know this is a cyclical industry. We remember the high interest rates of the 80s. We remember the Russian ruble crisis of the 90s. We remember the mortgage crisis of 07, 08. And, all of those were cyclical. All of those things caused changes to our industry, to the way we process loans, to how we deal with certain vendors and consumers. But at the end of the day, we all came through it. So I would say that we're all striving to keep moving forward. I anticipate we're all going to thrive. So, remember that we shall get through this. And, I want to say too that I would say that continue to be very inclusive. It's not just lenders and servicers. It is all of those vendors that are out there. It is all of those technology pieces that make their systems work. It's the title companies, the escrow companies. It's, all of the associations that are helping with the legislation and the monitoring. And it's all the great law firms that, we all are relying on and leaning on to keep us updated with all of their webinars and updates. And so I think that, we just have to collaboratively work together. And, as you said, the industry with mortgage rates hopefully staying low for the next, 6, 12 months, I think it bodes well for our industry. So that's what I would sort of say. Just remember what we've been through and know that we're going to strive and thrive out of all of this.
It seems like the only constant thing has changed, right?
Absolutely.
All right. Well, hey, Monika, thanks for the conversation. Great to see you. And hopefully we'll see you in person here in the next few months at a conference once we are able to meet in person again. As much as I enjoy the back and forth, over Zoom here or over webinar format, I think we're all kind of missing the one-on-one handshake, interactions that we've gotten so used to.
Absolutely. I miss the networking in person, and send out, all the best wishes to the CMBA team and all of our friends and colleagues. So thanks again.
All right. Hey, thanks again, Monika. And if you enjoyed the conversation, make sure and follow us here on our YouTube channel. You can also follow us on Spotify, Apple Podcasts, or SoundCloud as well. And then make sure and mark your calendars. We'll be back here next week on Monday morning for another episode of Connect.